Well, hello everyone. Happy Monday. Welcome to Trading a Smaller Account. We have a jam-packed agenda today, so I hope you guys have buckled up. We're going to go out and have a quick look at what's going on in the markets. I have 4 conditional order trades that we placed last Wednesday. We're going to have a peek at those. We're going to look at 3 trades on 2 different stocks that have hit our targets. And then we have 6 new potential example trades. We're going to look at 6 stocks. We're going to place a few example trades. It will likely not be 6. And today we are bearish by and large. Although there's one, if you wanted to go to the bullish side of the street, we could walk over there for a brief visitation. So that's what's on the menu for today. My name is Barbara Armstrong. I'm a coach with Charles Schwab. If you are not following me on X, consider this your formal invitation to follow me there. My handle, Barb Armstrong CS. I'm posting content there on a daily basis that I think you'll find informative and helpful. The last one I posted was a picture of my Supreme Ruler mug that my daughter gave me her water bottle with Nana on the other side, since I've now hit grandmother status. And there's a story behind that. If we have a little extra window of time, I may explain further. We also have Mike Fairborn with us in the chat. He's a friend and a fellow coach. He is excellent at all of the topics we're talking about today. So if you have any questions, don't hesitate to ask. I will also be looking at the chat in case there's a question that needs a chart or a verbal explanation. Know that options carry a high level of risk and aren't suitable for all investors as we get started, because we will be looking at a lot of option trades today. We use the Paper Money software application on the Thinkorswim desktop platform. Looks like, smells like, feels like real money, but it's not. One of the nuances or differences is that in Paper Money, as short options will never be assigned early. That can happen in a live account. Okay, so when we look at what's coming up next, we've got a 2-day workshop coming up in Metro Detroit, April 11th and 12th, followed by an advanced option workshop in Dallas. And I was just at the one in Chicago and it was fantastic. So if you're in the Dallas area, you may want to get out there and join them April 25th and 6th. And then Kevin Horner will be in both Detroit and Denver. And I think he's going to Dallas also, along with Mr. Ben Watson, May 2nd and 3rd, Denver. So we got the Triple D coming up. Okay. So this class, we started with 25,000. Our max position size, if we're buying a stock, is 5,000. Our max risk per trade, 500. Our focus, whether we're bullish or bearish, tends to be shorter term. So we're looking, primarily on a short to intermediate term time frame in this class. So we're looking more days to weeks rather than months to years. Okay. So let's get out there and have a look at what's cooking these days. So, the S&P 500, if we still see a longer term uptrend, but since February 19th, the clouds have rolled in. And what we were talking about last week was this, we had this, officially correction territory type pullback, given that it was over 10%. And then we saw this diagonal resistance breakout, pulled back, and then bounced. We're now back today, to our prior low. And so this bull flag did not, pattern did not continue, in that, with a bull flag, we would want to see, just let me dust off my drawing tools here. We'd want to see a low, a higher low, and then on Wednesday when we looked at it, another higher low. But now, that kind of got thrown out, and we're back here to a similar low. And so could this be an indication that we might be starting to go sideways? I mean, we've had entire years where the market went sideways. In fact, from 2001 to 2011, they call that the lost decade, because after 10 years, the market was in about the same spot that it had been. So could this be happening, or could it break below? And the answer is any of those things, could happen, or it could come back up here and continue on up. But right now, like what we thought might have been happening on Wednesday before I left for a couple of days to visit family, that didn't kind of go according to plan. Okay. And you know what? And the best thing we can do when things don't go according to plan is recognize that they are going according to plan, right? And then readjust the plan. NASDAQ, again, similar in that, if we look at the last year, and I'm going to show price as a percentage, whoa, in the last 12 months, now up only 4%. Where at the end of last year, we were up over 20%. And, we've given a lot back, haven't we? If we change this drawing tool from this February 19th, we're down 15%. In like 2 months. So that is a whole lot of ugly, especially if you're trying to do a long-term buy and hold thing. And Jay is saying, we have to trade what we see, not what we think. And so here's our NASDAQ again. Last week on Wednesday when we met, we said, well, hey, could this be, it is a diagonal resistance breakout. We had a low, higher low. And when we looked at it on Wednesday, another higher low. What had we not seen on Wednesday? We hadn't seen a close above the high of the low day. And so what did we do? We placed not one, not two, not three. We placed, three conditional orders and one alert. And so we said, hey, like Jay just said, we don't trade what we think is going to happen. And what we were thinking is that this might continue. We're trading what we're seeing. And what we were seeing was that we didn't have on these particular stocks we were looking at this confirmation of a trend continuation. Okay. And let's just look at the VIX. So the Dow, when I looked this morning, it was up a little bit, but do we see a similar theme here? Yes, and it's up a bit, but it's up a smidge, like 0.14%. So we're not talking a rock and recovery day. And, when we look at volatility, are we surprised that it's back up over 20? I left town and it just kept on climbing. It's up at 2250. Which is kind of in the nosebleed section for where it's been over the last year. Okay, so let's go and have a quick look at the 4 trades we placed on Wednesday before I left. And I think that these trades are really a celebration. And so let's come in up close and personal because American Express has been uptrending, right? Right. And then it got kind of hammer smashed. And then we saw this similar to what we saw, a diagonal resistance breakout, higher low, higher low, higher low. And so we said, hey, if it goes above Wednesday's high by 20 cents, get us in. And what did it do? It continued to pull back. And so now if you consider this the higher low, it's no longer, this is not a higher low than this higher low. So we're just going to go in and go, yeah, that actually went according to plan in that by placing a conditional order, we said, hey, if this goes the way we're hoping or we're anticipating, we'll get in right out of the gate. And if it doesn't, we'll avoid placing a trade that would turn out to have been unsuccessful. So we've done that. We've avoided placing a trade that would have turned out to be unsuccessful. So yay us. Okay, so that was the first one. So I don't want you to think when you have a trade that you end up canceling that, that you're a loser at picking these opportunities. No, you were brilliant in that, you placed a conditional order anticipating something, but knowing that it might not happen. And so did we do a similar thing here? Yes, we placed an order on Meta to enter if it went above 626. So, oh, sorry here. Let me change my drawing tool. It was actually 626.95. So it was just above that. And then it fell, and it's come all the way back down to this diagonal resistance line again. How ironic is that? But you know, like, it is certainly not a higher low. This is a lower low. So we're going to come back up to our working orders. We're going to come up to Meta, and we're going to say, yep, there we go, avoiding having placed another trade that would not have been profitable. So yes times 2. Now let's come and look at a firm. Did we catch a theme here? So a firm here, this was last Wednesday. Here was our conditional entry. And one of the things that I said was, you know, if these are not set it and forget it. So if we had been looking at this, would we have changed our entry to above here the next day? Yeah. And then maybe above here on Friday? Yeah. Well, now we're coming back to a similar low, but we placed this based on a bull flag entry, which did not happen. And with the other trades, we might have done the same thing on Thursday and even Friday. But, you know, now we are where we are. And if this bounces, might we do a short put vertical? Maybe. And maybe we just wait and see what happens with the market. But for today, yeah, no, we are going to open our trash can, which is called a cancellation, and just say, yeah, nope, we're just canceling it, throwing that. And you'll notice the whole order gets canceled. Our target and everything got canceled as well. Now we did a fourth one. So here's the fourth one, Carvana. Now, remember I said if you wanted to take a walk on the bullish side of the street, this might be a place where one might place a bullish example trade. But, you know, it had come up. This was Monday. It gapped up. Tuesday, you know, we had this day of indecision saying, hey, we may see a pullback. So we weren't surprised to see this pullback. And then unlike the other 3 examples, this has actually come back, and the 10-day moving average seems to have held. And today it's up 2.5%, which is, you know, quite telling in a day when so many stocks are not behaving bullishly. Well, we've got, you know, kind of a mix, you know, which is surprising when you see how much it's down, but you have a few of the big guys down, and it, you know, kind of influences the entire index, doesn't it? So if we come to Index Watch and come over to S&P, now I'm curious. You know, we're about a 50, half the stocks up, half down. You know, so could we do a bullish trade on Carvana? You know, we had an alert here at 222.80. And one of the things that I said when we placed that alert is, this is not even, whether you place a trade or place an alert, easy to throw that out. I had it show up on the chart. Now, if yours isn't showing up, if you come to the sprocket and say show alerts, you know, the default is not to show, but I said show alerts because I knew we'd placed one. And we're just going to cancel it right here. But, you know, the point I made was that you don't set an alert and then go out and sit on your deck in the sunshine. Now, it's not sunny here today. We've got snow coming apparently. But, you know, the next day you might want to alter your alert as to when to get in. And today, with this being uptrending, you know, if it's at 208, could we do something kind of conservative? And when we think about what's going on in the markets with tariffs, if tariffs end up making new vehicles more expensive to manufacture, might the used car market be a beneficiary of that? And isn't Carvana, you know, isn't that their space? You know, so could we maybe do a 205, 210 where it just has to go up a little bit, $1.25? So let's come and look at, does this trade 1 million shares a day? Well, we're already at 2.3 million. If we came out just 3 weeks, now what's the advantage of coming out 3 weeks is if it goes up, then it might hit our target faster. But if it goes down, we have less time to recover. So if we looked at this and said, and then do we have enough contracts? Yes, 20 times the number of contracts. Is the bid-ask spread tight enough? Is it under $1.80? Well, it's about, I don't know, 70, 80 cents. So we're okay there. So we're going to look at buying a vertical. And that would cost us $278. What's our break even? So this is a modestly bullish trade. Our break even is at 207.85. So it's a modestly bullish trade and our break even is lower than the current trading price. Yeah. I was on my time frame. I think I was on a 3-month time frame. Somebody's asking what type of time frame was I on, Chuck? This was a 3-month, 1 day. Yeah, 3-month, 1 day time frame. So when we come in here and we look at this buying a vertical, if it costs us $253, let's put our target at say, 280. So, well, it's going up before our very eyes. 258 times 1.5 is now let's make it 387. So first trigger sequence, right click, opposite order, we'll make it 390. Oh, now it's 255. This is live in the market. You could get whiplash. So 387 day. We're going to make this good till cancel, confirm and send. Now, could we do 2 of these? At 290, we're risking $580. We don't really want to go above 500. So we're going to leave it at 1. And we're going to put this in our long call vertical bucket. Okay. And this is a weekly option, which tends to have less volume than the monthlies. Okay. Confirm and send. That's weird. We've got stock buying power. Oh, I wonder if some stock was put to, no. Option buying power. Okay, I'm going to have to look into this because it's saying we have a negative, but our cash and sweep is 34,000. Okay, there's something wonky going on with this account. I'll look into it and figure it out. Oh, that's why. Create a closing order. I don't know how that happened. It must have been because I was away. Okay. So something happened. And you know what? I didn't look at this. So I'll look at this and maybe we'll talk about this on Wednesday. We bought some shares of Philip Morris. We're going to sell those because that's 15,000. That's too big a position for our account. Okay. Okay, so let's see if it will let us put that trade in again. I guess I didn't do as comprehensive a prep as I could have, did I? So we were April 25th and we were doing 155. Oh, no, we want to do Carvana. We want to do 205 and 210. It's moving on up. Okay. Single order, first trigger sequence, right click, opposite order. I'm just going to make it 280 times 1.5. And we're going to make this. We're going to make this $4. Confirm and send. This is going in our long call vertical group. Okay. Okay. Yeah. So Alan is asking a question. Can we do verticals when the account is under 25K and not a margin account? I do not know the answer to that question. So I would suggest that you, call the trade desk. Okay. And they can answer that question for you. Okay. So let's go to some new bearish opportunities, and then let's come back and look at the trades that we exited. So here we have Amazon, and Amazon is now pulling back, and has been, since the beginning of February. And then it had this diagonal resistance breakout, came back to this support line and has broken down. And when I first looked at this today, it had really, it was a bigger black candle and it's since rallied. So when we see this candle, this hammer candle, at what could be a support line, this might be a sign that, the buyers and the sellers are duking it out and the selling may be exhausting itself. So it might rally a bit, but might we sell a short call vertical on this? And if we were to sell that, where might we put our strikes? Well, we'd want to put it above this 192 line. So could we sell the 195? And would we want to sell it today? Well, we might if we think volatility's up, and if the market rallies tomorrow and volatility falls, we might not get as much premium. So if we're looking at selling a vertical, because it's broken a support level, we'd sell the 195, buy the 200 to define our risk. So we're at 159. The guideline, if you go to the trade management mini sessions and look at the example trading plan, the guideline that we created, we said, okay, we want to get, if we're in this for 25 days, which is the expiration we've chosen, if we come to our calculator and we say, well, we want to get at least one day, let me just close that. We want to get at least 1% per day we're in the trade as a rule of thumb. So we want this to be at least 25%. So if we take $5 minus 159, that would be 341. So if I take 159 divided by 341, does that come out to more than 25%? Well, it's 47%. And so if we come out here and we say, okay, if we did this short call vertical and our strikes are our short strike, which means we want it to stay below 195. Does that look reasonable on the chart? So in other words, this trade will be successful if Amazon stays below 195 for the next 25 days. And we've got earnings coming up, but not until May 6th. So if we say, yeah, we're okay with that, we've got, 188, we've got $7 worth of wiggle room. So if we're okay with that, then how many of these would we do? We do one, because we're risking about $340, right? So single, first trigger sequence, we're going to put in our initial exit at say 32 cents, which is about 80% of the max gain. Now, if this goes up and we're meeting next Monday and we've already got 50 or 60% of the max gain, might we just choose to exit? Absolutely. And can we change it? Absolutely. So we're going to put this in our short call vertical group. Okay. So we're putting that in there. So that was Amazon. Now let's look at Lulu. So Lulu was like this golden child for the longest time, very bullish. Oops. Back up. Oh. Okay. So if we back things up a bit and look at the last 2 years, you know, it was uptrending and then it took a big fall and then it came back up and some might have said, hey, that looks like a cup and handle pattern. But, you know, it's now, you know, fallen again. And might it be creating, you know, another like bigger version of a cup and handle? One might have thought so, but then it came in and broke down below this support level, which it had hit a couple of times. And looks like it may continue to fall. So if it rallies, you know, and we have an inverted hammer here, you know, and it tanked after earnings, but given that it tanked after earnings, even though it beat on earnings, which might imply that the forward guidance, and you'd want to go and have a look, might not be as strong, you know, and I don't know that for sure. I'm just speculating, but you might want to come and look at the live news on Lulu. Okay. But what if we look at this, could we say, could we sell maybe the 310? You know, and it's trading at 284. I don't know, we might not get enough premium. But if we came out here and looked at this 310, we've got a 45-cent bid-ask spread. You know, that's a bit much. We actually would rather, you know, that's a little high for us. We want it to be under 10%, you know, so that's kind of high. If we come out to May, 46 days is a long time to be in this, you know, but, you know, do we have a tighter bid-ask spread? We do. You know, and then we said, where did we want to be? At 310. So if we looked at this, this is an acceptable bid-ask spread, the 310, 320. But when we're doing a vertical and when we're selling a vertical, how much are we risking here? We're risking almost $800. So, you know, that's a little too rich for our blood. So we don't want to come out to the monthlies. Like, could we come out 32 days? We're over $1 here. The bid-ask spreads are currently too wide. Yeah. Yeah, Jerry, we did talk about the tariffs. And you know what? Like, so, you know, might used cars continue to be popular even if some of these tariffs are rescinded? They might. You know, it's, you just have to look at all the information and then try and make an informed decision. So on this one, we're going to say no. The trend looks appealing, but the problem with it is the bid-ask spread. It doesn't meet our requirements. Now, if we come and we look at CRM, like a lot of other stocks, longer term has been uptrending. It's gone from 187 in the last 2 years to 369. But if we come and look at the last 6 months, what do we have here on CRM? What pattern do you guys see? Yeah. Yeah, we didn't end up doing a trade on Lulu because the bid-ask spread was too wide. So, sometimes it's important to follow our rules. So when we look at this, some might see, um, some might see a double top. Some might say, well, I'm going to draw this like this and call it a double top. Some might call this a head and shoulders. And it broke down below and then it came back to retest and then it's continued to fall. Now, I measured this range before the class started, but we have a range here, and this is approximate of about $42. And it's interesting because that would have given us a target of about 260. If I took $54 off of 314, and where did it come down to? 259.19. Kind of interesting, isn't it? But we've got this hammer pattern today. And if you're newer to candlesticks, I'm doing this series of short, very short videos on candlestick patterns. There is one on hammers there. And it's saying, it could be that the sellers are starting to get tired and we might see a rebound. And so on this one, we might wait and come back and look at this on Wednesday. Now, we did have a short call vertical on this and a long put vertical on this. And spoiler alert, those turned out pretty well. So if we come to the monitor tab and we come and we look at CRM, you can see that on March 7th, we did a short call vertical, which means we wanted it to stay above 295. And then we also did a second bearish trade, which was more directional, a long put vertical. And so the long put vertical we ended up out of on Friday. And so, to just quickly, and I did the math ahead of time just so we could make it a little faster. Oh, sorry. So we got in at 245, out at 380 for our long put vertical, which means our net, if we took our 380 minus the 245, we made $135 because we did one contract. And when you look at that, a return on our risk, what were we risking? Well, we were risking $245. We could have lost the whole thing. You take 135 divided by 245, we ended up, oh, sorry, I have multiple pieces of paper up here. We ended up out at a 55%. It was just over 50%. That was a 55% return on risk. So it was a base hit, it did exactly what we had hoped or planned. I don't like using the word hope. I say it's a 4-letter word. Chester is asking if I have a video on the option chart setup, and I do, and I'll show you where that is in a minute. It's a little, multi-resource center. So the second one we did was the short call vertical. We did that on the same day. And so we sold that for 101. We bought it back for 19. So with our short call vertical, that was 101. We sold it for, we bought it back for 19. We made $82 on that one. And what was our risk? So for our return on risk, it would be 82. And this isn't divided by 101 because what we were risking was $5 minus 101. So it's 82 divided by 399. Got another screen in front of me here. Okay. And so that was about a 20% return on risk. And we made less money. And, so do you look at this and go like, hey, long put verticals are the bomb and we should never do another short call vertical? Well, the probability of this trade being successful was higher. And we ended up out of it a full week earlier than, the long put vertical. And so they're kind of different animals. And this is, we tend to see a return on risk somewhere between, by the time we net it out, and I'm not even taking transaction fees into account, between 18 and maybe 35%. Here we're looking for, sometimes we'll exit early 25, and our goal is 50%. Sometimes we get, I call it a paper money fill, or sometimes the stock will gap up and we get out a little higher. But this one is more directional. So it's just important that we understand that. Okay. Okay. So that was those two. So now we've reviewed 2 of the 3 trades that I wanted to review. So we said no on that one. CRM, we were going to wait. So we're a wait. And sometimes it's it's not like, oh, we don't have the courage to make a decision. No, we're looking at this and we're making an informed decision to wait. That's a totally different animal than saying, I'm not sure, I don't want to make a decision. This isn't that. This is saying, based on this candle pattern, which might be indicating that this pullback is complete, I'm going to wait and see, maybe it'll come up and kiss this 270-ish line and roll over, and then I'll sell my short call vertical or buy another long put vertical or whatever. So sometimes waiting isn't procrastination. It is, in fact, making an informed decision. Capiche? My son, when he was little, I used to say capiche, and he'd say, like, I don't like capiche. It's like, yeah, well, none of us do. There are times when none of us do. Are we seeing a similar thing here? Yeah. And, we had, again, and maybe we'll look at the Adobe trades another day, but, we have this coming back down. But, when I look at this one, here's the difference between this and CRM. This is at a support level. But, it's still gapped down. It's down over 1%. So might we want to wait until tomorrow to see if it rebounds? And if it rebounds, then maybe, we sell a short put vertical. Or if it breaks below this support level, then we sell a short call vertical. But it's sitting here, this candle of indecision. And so we wait. How about AMAT? AMAT, we had a short call vertical on AMAT. That worked out well. It hit our target, and we, we got out at our 80%, so we can take that, but this gives us a support level, but now it's breaking below. So with AMAT, could we come up here and sell something at the, and again, we've got this candle saying, hey, this may be a bottom and it may not. But, so with AMAT, might we do a short call vertical, at 150 or 145? We could. But, given this pattern, so if we did a short call vertical, we have 100. We've got a tight bid-ask spread. So Lulu, it looked like we had an entry, but the bid-ask spread was too wide. And here at 150, 155, we'd be selling the 150, buying the 155. That's $7 of wiggle room. We're getting $1.50. That's about a 30% return. If we sold the 150, which is above this level. But, again, might we want to wait? Might this have found about, and might we be able to get more for that if it rebounds for a day or two and then continues down? Okay. Okay. So that was that one. So what did we end up with today? We ended up with a lot of weights. And can we put alerts on those? And we can, but we could also say we now have our watch list for potential entries. Okay. So let's look now. I wanted to take you just quickly to the Trader Talks because we had some questions on, setting up charts. And so this is where, I'm going to add my little, short commercial break for something that is free, which is, hit that button in the bottom right corner of your screen to subscribe to the channel. And what will, this Trader Talks from Schwab Coaching, what happens when you first get there is it will bring up, whatever is currently being taught or whatever's coming up next. And then if you come to playlists and scroll down, these trade management mini sessions, if you go to the very bottom, I created a whole bunch of short videos because I get asked questions all the time. How do I get my charts to look like your charts? So here's a 10-minute video on customizing charts. Or how do I get my monitor tab to look at yours with those profit and loss percentages and all that kind of stuff? Or I saw you had a customized watch list. How do I create that? So here's a whole bunch of videos. It's under Trade Management Mini Sessions. Then I have also created, we have a bunch of postmortems here on comparing different trades that have hit targets, and I'll put those in here. And then these are the example trading plans. So here's an example trading plan that I referred to for short call verticals. It's just an example, but you can go in there and look at that and then say, well, I like this, except that I'd like to tweak it this way or that way. And you can tweak it however you like. And then we also talked about long put verticals today. And here's an example trading plan. We did an example of a long call vertical. So here's an example trading plan. So you can go and look at those if you haven't done so already. These two on compounding, I'm really huge on financial literacy. So this is one, share with your family, share with your kids, share with your parents, share with your friends or your neighbors. This really blew my hair back when I first realized this. And I wish I'd realized and taken action on that when I was 20, let me tell you that. And then this is a new series that I'm in the midst of creating. The first 4 are up. The goal is for them all to be under, 5 minutes. The goal is they'll all be between 3 to 5 minutes. And you're going to see that one continue to grow as well. So that's just a resource. It's kind of a drawer full of helpful content. Okay. So let me just have a quick look at the chat. Yeah, now as far as seeing what classes are coming up next, if you go to schwab.com/coaching and you come to live webcasts, you can see the whole schedule. And I teach every day. Mike is in the chat today. If you're saying like, oh, what does Mike teach? We can come here down to Mike Fairborn. And you can see that on Tuesdays, he teaches swing trading. So he'll be teaching swing trading today at 3 o'clock. And then on Wednesdays, market and sector analysis. He's filled in a lot for me on After the Close. I'm hoping he'll do that for me again next week when I'm out of town again. So yeah, he does a class that is super popular on Think Scripting. So if you want to get under the covers on Think Scripting, yeah, check it out. Okay. So guys, that's a wrap for today. We placed a long call vertical on Carvana, and then we did let me just bring up our chart, because when there is a survey, one of the questions that I'm often, or suggestions is often, will you review what we did? And so we did the long call vertical on Carvana. And we opened a short call vertical on Amazon. And then we agreed to come back on Wednesday and look at Lulu, CRM, Adobe, and AMAT. And so that's what we covered today. If you would do me a favor as we wrap and hit the like button, what that does is it helps move things up in the trading algorithm so more people can find this content. Subscribe to the channel. And then don't forget to follow us in the land of X, Barb Armstrong CS and Mike Fairborn CS. Thanks to Mike for his help in the chat. Appreciate it. I don't believe there was a survey today, so you're off the hook for that. But we'll see you in a webcast coming up soon. Thanks for joining us today. Bye for now.